Good evening, ladies and gentlemen. It's September 5th, and the time has come. Tomorrow, at an hour before the market opens up, we have our non-farm payrolls and unemployment report coming out. And I just want to be very clear here that the expected moves, the implied risk for tomorrow has grown in size tremendously. So that's what we're going to be talking about here on today's stock market brief show. We're going to be getting right into the expected move. So if you want to put these on your charts, please do so. We have the upper level, lower level, and the upper and lower for the 2 sigma levels. Now, if you think of this in terms of a distribution curve, 68% of the time it finishes within this range of risk. And then we can also 95% of the time finish within the upper and lower levels of the 2 standard deviation. Now, these are the various products that I track. We have SPX, ES, and Q ready, and so forth down the list. The expected moves for tomorrow on the SPX, the big product, is $60. That's plus or minus. And yes, this is a very large expected move coming into tomorrow's trading session. Just for the week alone, which by the way was a shortened trading week, was a $76 expected move. And just for tomorrow's report, we're looking at roughly $60. So big stuff there. Now let's just look at the daily chart for the S&P 500 before I show you the more intricate time frames zoomed in. But SP 500, you can see we finished a little bit lower on the day, lower volume. This makes sense as volume's drying up coming into a bigger report. And we tried to fill this gap up a little bit more, but we haven't done so yet. We have the lower swing low anchored volume weighted average price to see what price does if it were to come in and around these areas. It doesn't need to make a snap there right out of the gate, and it could cut through if it does. But we could potentially see it bounce back and see it test maybe later or maybe not at all. So we'll continue to monitor that. That's the SPY. Let's take a look at what the Qs are showing now. And the Qs, you can see a little bit more volume today than the prior trading day, and we finished a little bit higher. So tech, surprisingly, actually finished up on the day, and we're kind of floating around that swing low anchored volume weighted average price. IWM came down to its swing low anchored volume weighted average price today. It was showing relative weakness on the trading session, but you can see we're kind of bouncing around at that swing low anchored volume weighted average price there. I want to show you a quick look at the trends of these products on these shorter time frames. And what you'll notice here is they are still here in red. Now, there was something that I pointed out earlier in the trading session and also on last night's brief of something to watch. Now, we can look at it from a smaller time frame and a larger time frame. Yesterday, I talked about it as far as the larger time frame goes. But you can see SPY, the low of yesterday's trading session was right here, and we had a new low today. The Qs, tech, right, had a low of yesterday's trading session, and this was actually never breached. So is this the market telling us that we might potentially see a rotation back into tech to see a bounce in the markets here in the near future, or will this get washed away? It's yet to be seen, but what I can tell you is this. The 5-day moving average on all these products, they're still declining. As you can clearly see, all the red on the screen, that's when price is below it, and the calculation is bringing the 5-day moving average down further. So you can see that across the board there, they're all in those bearish trends. If we take a look at levels here on the S&P 500, I just wanted to point out here that 5,500 seems to be an important level. It's kind of been bouncing in around these areas, and you can see that from a net gamma perspective too, if I were to show you that. So let's load that up, and you can see 5,500 is right over here, but you do have some traders reaching out a little bit further down, so we'll see how that fares come tomorrow. Overall, though, we are still in negative gamma, and when you're in negative gamma, you have an increase in volatility typically, and you have selling into selling, buying into buying, you get violent moves on both sides. And we kind of saw that today, how we started the day up nicely, and then we saw this violent sell-off into and around that 5,500 level. Let's take a look at the 15-minute time frame. So the 15-minute time frame, we're not too far off that lower monthly expected move. So I'm going to be keeping a close eye there because that lines up with the other levels that we talked about on the daily time frame. You can see that we went through round 2 of trying to fight the week-to-date anchored volume weighted average price. We came up into it today, and then we got rejected. Yesterday, we came into it, and we got rejected there too as well. So you're going to really want to see if we start seeing price come up, we want to see price doodle around and then try to break for it to come to that the lower weekly expected move and upper daily expected move for a potential bounce. But if we do continue to get that further sell side, just be aware that the lower levels would be that lower daily at 543.77 and 544.55 for the lower month to day. We did have AVGO report after the bell, and that has brought the markets down slightly in the aftermarket session. So you can see it's trading in and around its earnings expected move. We found support at it, we bounced, and then we're trading under that as it stands in this current moment. Apple finished positive on the day, but it still hasn't recouped its 5-day moving average. Microsoft is the one that finished pretty much flat on the day, still below its 5-day moving average. Nvidia finished up on the day, and it's still below that 5-day moving average there too as well. Google also finished up on the day, still below a declining 5-day moving average. The ones that are kind of looking interesting to me right now is something like Amazon. Amazon is above its 5-day moving average, and it's inclining. When I show you the daily time frame right over here, you can see that it's trying to break this downsloping trend, but I also drew in a possibility of a bear flag. So as we're seeing some higher lows pressed on the lower time frame here, you can see right here, some higher lows being built. You can have those as the potential levels of risk, but if we are going to continue to the upside, this could be one that potentially pops. Same thing goes for Tesla. It was up 4.9% on the trading session today. It's above a rising 5-day moving average, and you can see a series of higher lows. So make sure you manage risk at one of those levels. And then you could also go to the daily time frame where we started to break through it yesterday, and we're just getting some follow through on some decent volume. Meta, I haven't had a chance to look at, but Meta did finish up on the day. Let's take a look at its 5-day moving average. This one looks interesting to me because the 5-day moving average is starting to flatten out here. We're at this volume point of control for the last 10 trading days or so, and we started to see some higher lows. So if we are going to start breaking this, start breaking some of these levels over here and maybe have risk in these areas. So you'll be really kind of looking to see if the 5-day moving average could start turning up. Maybe price comes around or doodles around and starts to break through it to see, potentially a nice move in something like Meta. That's all I got for you on today's episode, everybody. Hope it helps out, and see you later.